Good afternoon and welcome to GrainTV. It's December 31st, 2013. To my left is Logan Burgess and I'm Brock Shimbino. We had a mixed trade in Chicago to end the year. Let's turn over to the live quotes to see how we ended. Corn was down 2 cents. Soybeans, the leader to the downside, off sharply today, down 19 cents. Wheat in Chicago for the March contract up 4 3/4, and Kansas City March wheat was up 5 cents as well. You know, Logan, we did see a little bit of selling in the corn market, a little bit of buying in the wheat market. But really, the highlight of the day today was the soybean market that really took it on the chin today.
Yeah, you know, Brock, there were some factors weighing on this bean market early in the session. One was a rumor that commercial traders have stopped loading dried distillers grain for Chinese shipment here amidst recent Chinese rejections. Now, at first glance, that's going to look like a corn story, but there's a lot of concern that lower DDG prices domestically as a result of commercial traders no longer shipping to China is going to really impact the soy meal market as well. We've seen domestic DDG prices back off quite a bit here in recent trade sessions, and it seems like soy meal is going to have a hard time remaining competitive in feed rations if we have a falling DDG market. That seemed to spill into beans today if we take a look here at the daily chart of the March contract. And we really, with today's close, a very technically weak close today for soybeans. You can see here the dashed line is the trend line that we've been watching since back about late November. With today's close, though, that now has been broken, and technical traders are going to look at this as a very weak sign here moving forward.
You know, we did break below that trend line. We saw commodity funds get in and start selling quite a bit as well. We saw 6,000 contracts taken off the tables by commodity funds. But right where we closed, right near the close, was the 50-day moving average and the 100-day moving average. So that could give us just a little bit of support moving forward, barring any changes to that fundamental story about the DDGs. You know, we saw the selling in the front month here, but also in the deferred months we saw some massive selling for the November contract for new crop.
Yeah, if you look at the new crop here, as you said, Brock, exactly correct. This here has been a pretty good trend line going back to about September, and with today's close that was broken as well. So it's a little bit infrequent to see the front month and the new crop contract both close hard below technical support. Certainly not a good indication here for the bean market moving forward, and I think a lot of traders are going to look at this bean market now that we're on technically weak footing. And with the large Brazilian crop in mind, I think there's still some downside here for this market. Let's take a look at the weekly chart, and you can see here the trend line that we have drawn. That's going to intersect about 1120, so I think that's kind of a good downside objective for the November 14 contract. Like I said, on weak technical footing and with a looming large crop out of South America, I think right now the bears seem to be a little bit in control of this bean market. Yeah,
very weak finish to the year for soybeans. Corn, we had a little bit of weakness as well. We were only down a couple of cents, but we're kind of hovering right above that the support that we've been watching here, right around that 420 area. Today we did make a 1-month low close for the March corn contract, and we're hovering right above the contract low around 418.5. That was made back in September of 2012. So we're kind of in a precarious position here for corn as well. You know, hovering near the support, hovering near contract lows. If we were to break below that, we could open up the downside for quite a move lower, maybe down to the $4 level. I'm looking for this support to hold here in the near term, though.
Yeah, you know, I think a big story to watch is going to be this dried distillers grain story, because that is not only going to affect soybeans, but corn very much so as well. Lower domestic DDG prices is not good for the ethanol crush margin, which we've seen be very strong here recently. So that's going to be an important story to keep on your radars here in the coming weeks, and we'll help you do that here on GrainTV. Just a reminder of the market hours that we're going to be seeing during the New Year's holiday. As you can see here, today we had a regular market close. Markets are closed Wednesday for New Year's Day, and markets will be back open 8:30 o'clock Central Time on Thursday for normal hours there moving forward. So if you have any questions about what we discussed on GrainTV or want to take a look at our great new mobile trading app, we'll be in the office Thursday and Friday. Our number here is 877-472-4607. Everyone out there, enjoy their New Year's. We'll see you back here on Thursday.